Good afternoon, everyone, and thank you for attending today's 2021 Fall Conference presentation on the life cycle of uncashed state checks offered by the Office of Unclaimed Funds. And now we will get right into our presentation, the life cycle of uncashed state checks. Today, the presenters are myself. I'm Marisol Pereira Salazar, the Director of Compliance Services in the Office of Unclaimed Funds.
Good afternoon, everyone. Thanks for joining us. I'm Ann Barrington. I'm an Assistant Director in the Office of Unclaimed Funds. I oversee the Securities Cash Audit and Reconciliation Unit.
Hello, everyone. My name is Kim Ryan, Supervisor of Reports Processing. Welcome to our presentation.
So our agenda today is going to include the core functions and the key services of the Office of Unclaimed Funds, information on the two sections of the abandoned property law that pertain to uncashed state checks and the due diligence requirements. We're going to outline and detail the outreach and reporting process, and we're also going to provide references for you to take away. What are unclaimed funds? Funds in the form of cash and securities become unclaimed after a period of inactivity, and when the efforts to contact or locate the owners have gone unanswered. At the end of the state fiscal year, the Office of Unclaimed Funds held $17 billion in unclaimed funds from organizations that included banks, corporations, state agencies, and many other sources. Last year alone, the OUF received almost $977 million from holders and almost $80 million from uncashed state checks. These unclaimed funds are transferred to the state's general fund until the rightful owner or their heirs make a claim. The last fiscal year, our office returned $400 million to rightful owners, and we transferred $572 million to the state's general fund. Our office has three core functions related to the mission of unclaimed funds. We pay claims, we process abandoned property reports, and we perform audits to ensure compliance with New York State's abandoned property law. Last fiscal year, we returned 800,000 accounts to their rightful owners. We processed 12,000 abandoned property reports, and we added over 2 million new unclaimed accounts to our owner database. We issued 143 audit reports, and we recovered $144 million through these audits. And our voluntary compliance program, through that program, we increased the awareness of the APL to holders, and we received $23 million in voluntary compliance reports. The key services that we provide as an office are to raise public awareness in the form of outreach to holders. Last fiscal year, we mailed over 118,000 letters to owners of newly reported unclaimed funds. With these mailings, we've achieved over 40% payment of unclaimed funds back to the rightful owners. We also conducted 3 holder education events with professional organizations. And we all continue to work remotely in response to New York's state of emergency. We created e-learning videos to assist reporters in obtaining information from our website related to the reporting process. You're going to be watching one of these videos during our presentation. But if you have ideas on more videos that you'd like to see, let us know in the chat and we'll see what we can do. Last year, we mailed out 33,000 amnesty invitations to our companies who haven't reported unclaimed funds in the past. To increase the owner's ability to easily claim the funds from our office, we create, maintain, and publish a database of over 10 million owners. About 85% of the claims generated to our office are online through our online claiming website. We included a link at the end of this presentation so that you can check for your own unclaimed funds. Okay, so let's talk about the abandoned property law. The law was enacted in 1943, and the APL defines some terms that we all need to be familiar with before we discuss uncashed state checks. Abandoned property is defined as the financial assets that have no activity from the owner for a set period of time. Holders are entities such as banks, brokers, utility companies, and state agencies that control the unclaimed funds until they're transferred to the state under the abandoned property law. And as custodian, the controller acts in a fiduciary capacity to safeguard those lost or forgotten assets belonging to New York State residents. Under the APL, the controller directs holders of unclaimed funds in the proper transfer of abandoned property. And unclaimed funds are used for the benefit of the citizens of New York until they're claimed by the rightful owner or heirs. Uncashed state checks and debit or payment cards are covered under Section 1315 of the Abandoned Property Law and Section 102 of the State Finance Law. When uncashed checks, debit, or payment cards remain uncashed or unpaid after 1 year from the date of issuance, these amounts are deemed abandoned property and they're transferred to the comptroller. We have a guide to financial operations that is listed here for your reference as a takeaway. Prior to these amounts being transferred to the controller, holders are required to perform due diligence under Section 1422 of the APL. And to complete due diligence, holders have to send a first-class mail notice to each person who the holder expects to appear on their report of abandoned property. If the holder can demonstrate the address they have on file for the owner isn't their current address, or if the owner's address is unknown, then due diligence does not need to be performed. But in addition, at least 60 days prior to the final report, holders need to send a second notice by certified mail, return receipt requested, for owners whose property is in excess of $1,000. If the holder has made written contact with the owner as a result of that first-class mailing, or the first-class mailing was returned undeliverable, then the second-class mailing does not need to be performed. SFS checks and agency checks are handled differently, and we're going to talk about those differences later in the slide. But at a very high level on the flowchart, the life cycle of uncashed state checks starts with approving the check request. Once the check request is approved, the check is processed, printed, and mailed. Checks that clear the payment process are updated and recorded in SFS. For checks that remain unpaid, due diligence outreach is conducted to reach the owner, and in that due diligence outreach process, the payee's return signs letters instructing the reissuance of checks. The checks where written contact has not been established with the owner are reissued, and any checks where the owner doesn't respond to the first class or certified mailing are escheated to OUF. Kim is now going to discuss the due diligence outreach process in more detail, and I will turn the presentation over to Kim.
Here you see our e-learning videos and resources. These videos were and still are being created to provide guidance and explanations on reporting procedures. We are going to take a look at the first video, which explains the due diligence process. The resources in this video include the New York State Abandoned Property Law, industry handbooks which are specific to state agencies, and U.S. Securities and Exchange Commission. Now we are going to play the actual video.
The New York State Comptroller's Office of Unclaimed Funds is pleased to present this video on the due diligence process. Did you know that as a company holding inactive accounts or unclaimed funds, you, the holder, are required to conduct due diligence before submitting your abandoned property report to the New York State Office of the State Comptroller? But what exactly is due diligence? Who has to perform due diligence? And when should you perform due diligence? Due diligence is attempting to contact the owners of inactive accounts or unclaimed funds before sheeting or transferring the funds to New York State. The law requires companies to attempt to contact the rightful owner by mailing notices and sometimes publishing in newspapers. It's good customer service, and it's required under Section 1422 of New York State's Abandoned Property Law. Remember, due diligence is not optional. How exactly do you meet the due diligence requirements? The first step is to send a notice by first-class mail to every person or business with a valid address who is expected to appear on your abandoned property report. You're required to send your notice at least 90 days before your final report is due, but you can start sooner. What information should be contained in this notice? You should advise the owner that their unclaimed funds will be reported as abandoned property and will be remitted to the state comptroller unless the property is claimed before the remittance date. The remittance date is the date you will submit your report, and that date should be included in the notice. A deadline may encourage the owner to contact you. You don't have to send a notice by first-class mail if you do not have an address for the owner, or if you can demonstrate the address you do have is not current. If a prior mailing was returned as undeliverable, you don't need to send another mailing. By law, reporters of abandoned property may roll up abandoned accounts valued at $20 or less and group into one aggregate amount for each property type. If you aggregate items, you will not need to send a notice for these items. If the owner contacts you and you are able to reunite the rightful owner with their unclaimed funds, remove the item from your abandoned property report. We recommend notifying your customer service staff that the notices are being sent and make sure they know how to reactivate an account based on a due diligence response. If you do not receive customer contact as a result of the notice by first-class mail, the second step in the due diligence process is to send a notice by certified mail, return receipt requested. You are required to send this notice to owners whose funds have a value over $1,000 at least 60 days before your final report is due. Holders are required to send notices by certified mail on dividend reinvestment plans regardless of the value. You do not need to send a notice if the account is valued at $1,000 or less. However, in the spirit of the law, we ask you to send a notice if you have multiple accounts for one owner and the total of the accounts is more than $1,000. You do not need to send a notice by certified mail if you received a claim and you are in the process of reuniting the owner with his or her property. Also, you do not need to send a certified notice if the first-class notice was returned as undeliverable, or if the last known address you have for the rightful owner is in a foreign country. Costs paid for notices by certified mail may be deducted from each item as a charge. You may not make a bulk deduction against the final remittance. The cost of notices by certified mail for dividend reinvestment plans may not be deducted from the item. Costs associated with notices by first-class mail may not be deducted. How can you increase the likelihood that your customers and clients will read your notices? Printing keywords or phrases such as time sensitive or response mandatory on your envelopes may increase the possibility that the mailing will not be mistaken for a statement or junk mail and discarded. A short but reasonable deadline may also increase the likelihood of a response. Give your customers several options for responding to your contact, such as including a stamped self-addressed envelope or providing your fax number, mailing address, or email address. You can include a telephone number, but you should follow up on verbal contact with your customers and obtain a response in writing. And use understandable words in your communications. For example, say remit to New York State instead of a sheet. If your company issues securities, the U.S. Securities and Exchange Commission, also known as the SEC, has additional requirements if your accounts include dividend reinvestment plans or other shares. Refer to SEC's Rule Number 17AD17, which provide guidance on searching for lost security holders and sending required notifications to unresponsive owners. If you fail to perform your due diligence, you are still required by law to report any abandoned property you are holding. In addition to due diligence notices, certain industries are also required by law to publish notice of unclaimed funds in at least one newspaper. Refer to industry-specific sections in the handbook on the OSC website for additional information on publication requirements by industry. We hope that you found this presentation informative and beneficial. If you have any further questions regarding the due diligence process, please contact our reports processing unit.
On this slide, we are showing you part of the GFO that talks about the format we ask state agencies to use when they enter information about a vendor and SFS. Below, you see some examples. We realize sometimes the vendor may fill in some of their own information, but as much as possible, we want to ask everyone to use capital letters for our entity's legal name. Do not enter a DBA name in the name or address field. Rather, list the DBAs as a company with the name in both the last name field and the company name field, with ENT in the suffix to indicate an entity. For example, John Doe, DBA, Johnny B's Eatery would go into both of those fields and not separated, as well as several other formatting requests, such as using first name, middle initial, last name, and not using special characters in the name fields. By following these standard formats, it helps us to be able to return funds to the rightful owners. If the data is received in a way our system will not accept, it will hold up the report from being released until it's corrected. It also makes it difficult for the owners to locate their funds. If this GFO isn't clear enough, you could also reference the handbook for reporting organizations beginning on page 17. The link is provided on the resources slide number 28 in this presentation. The GFO references you see at the top are where the naming conventions are shown. Later in the presentation, Anne will be explaining the reporting timeline.
So checks issued by state agencies. So checks issued from the general checking account by Treasury and OSC. They're signed by the Commissioner of Tax and Finance and the Comptroller. These checks consist of vendor checks, SSI, SSP checks, as well as state payroll checks. Checks issued from the Comptroller's refund account by OSC. They're signed by the Comptroller only, and these consist of refund checks. There are also checks issued from agency-held accounts. These are non-SFS checks. They're from sole custody accounts. They are signed by agency heads. So the outreach process for uncashed state checks. Comptroller's office performs outreach for refund checks issued out of the Comptroller's refund account and payroll checks issued out of the general checking account. The Department of Tax and Finance, DTF, performs the outreach for vendor, employee expense, and SSI checks issued out of the general checking account. Originating agencies are the point of contact for the payee to request reissuance for checks issued out of SFS. Outreach letters for uncashed state checks issued in 2020 will be mailed in July 2021 and again in September 2021. These dates have to do with the first class mailing versus the certified mailing. Marisol spoke about this earlier when she referenced Section 1422 of the Abandoned Property Law. So checks issued in 2020 will be escheated to OUF on or before June 2022, according to the APL. However, in practice, these checks will be escheated by April 30th, 2022. We will discuss the reporting timeline on a different slide later in the presentation. So what do I do if I work for a state agency? The answer is it depends. It depends on what checks you are working with. DTF and OSC perform outreach, due diligence, mailing, and reporting for checks written out of SFS and state payroll. Agencies are responsible for the outreach and reporting for any checks written from agencies' sole custody accounts. Agencies must perform check reissuance requests as part of the outreach process for checks issued out of SFS. So here is a little graphic on what I just explained regarding the outreach process. So on the left, you can see DTF and OSC perform the outreach of the due diligence and reporting for checks written out of SFS and state payroll. On the right, if checks are issued from sole custody agencies, they are responsible for the outreach and reporting for the checks written out of the agency's sole custody accounts. Okay, so here is an example. Next. Okay, here is an example of the outreach due diligence mailing. As you can see, the date is July 14th, 2021. It will include the name of the rightful owner, address, and what type of check it is. It informs the payee that our records indicate that the below referenced check or checks were issued by the state of New York to a payee listed above and have not been cashed. Then it provides a couple of options for the payee. If you have the check or checks in your possession, please cash them immediately, no later than April 1st, 2022. If you do not have possession of the check, then complete steps 1 through 5 to request a replacement check and submit the completed form by the return date, which is, for this example, is August 21st, 2021. So step 1, if your address is correct, check the box yes. If no, correct the address above. You can see here that there are lines provided to make the address corrections. So step 2, put an X to the left of each payment for which you or someone you are authorized to make a claim on behalf of are entitled and would like to have a replacement check issued. Step 3, you would check yes if you are authorized in claiming on behalf of someone else other than yourself. For example, if you are claiming for someone who is deceased. Otherwise, you would check no. So step 4, provide a signature and date. Step 5 is the return address where the completed form is going to be mailed. We have circled the address here, which shows that it is going back to OSC Payroll Department. So like we said before, the agency that issued the check is where the due diligence response is going to go. So issuing replacement checks. For the general checking, signed outreach letters that are returned will serve as authorization for reissuance of a check to the payee. The replacement check can be processed one of 2 ways listed here. On the left, the agency determines the appropriate action to honor the payee's request and completes Form TD 346 and returns completed form to Treasury at the email provided on the slide. On the left, The alternate process is agencies must specify action to be taken on the letter and return completed letters to Treasury at the email address provided on the slide. If a payee returns a form indicating an address change, the address must be updated in SFS prior to submitting the outreach letter or TD 346 form to Treasury. Issuing replacement checks from the Comptroller's refund account. The process for replacing checks via outreach letter requests will be consistent with the current SFS check replacement procedure. Agencies must email a completed AC 3337 to the Bureau of State Accounting Operations at the refund email address provided on the slide. An Excel list of the checks may be attached with one AC 3337 form if the same action is required for all checks on the list. Agencies should monitor the SFS query listed here to confirm check cancellations. So process benefits. It provides a consistent outreach process and letter format to vendors, state citizens, and others for all warrant types. It provides a streamlined business process which leverages existing agency business processes for check replacement and closing the voucher. It also provides an audit trail because the bank account used for issuing the original check will be used for the replacement check. Replacement checks will be issued with a different check number. It also provides the check clearing data, which is available in SFS and also available for extract. Okay, so reporting timeline. So over the past few years, there has been some changes to the reporting timeline, as you can see from the dates provided. On the left, the final report and remittance are due on or before June 10th, which is in accordance with the statutory requirement. So if you are an agency where the checks are issued from sole custody accounts and agencies perform outreach and reporting, you will follow the reporting timeline on the left. On the right, the final report and remittances are due on or before April 30th. It was determined that April 30th was a better time to, in practice, have the funds reported and remitted to OUF. So if you are an agency that issues checks from general checking or the Comptroller's refund account, and DTF or OSC performs the outreach and reporting, you will follow the reporting timeline on the right. So as you can see, there is also differences to the timeline to the due diligence mailing for the first class as well as certified mailings. So you want to pay special attention to the reporting timeline that you'll be following and the due diligence mailings. The one thing, however, that remains the same is the cutoff date of December 31st, which is the year following the year in which the checks were issued. So for this example, the cutoff date is December 31st, 2022. It will be for checks issued from January 1st, 2021 to December 31st, 2021. We also wanted to point out that once the reporting and remittance is submitted to OUF, the payee can no longer request a replacement check. You will need to refer them to OUF to claim these amounts. So as Kim mentioned earlier, in the importance of issuing standard formats for reporting owners' information, this is where it really counts. The ability for us to balance and release reports to claims relies heavily on how the information is reported to us.
Some of this information we discussed in previous slides. In this example, shown in 2021, by December 31st of 2022, any of those checks that have not been negotiated or reissued would be reportable to us the following year, which is now April of 2023. So you want to keep track of all those checks that were issued so you can make sure they're removed from any escheatment files. And during the year prior to reporting, you will be performing your due diligence. There's the first class mailing that goes out to everyone who is to appear on your report, regardless of the check amount, and certified mailing to owners who had a check valued at $1,000 or more. If the first class mailing has been returned to you and you're going to reissue a check, or if the letter comes back undeliverable from the post office, you do not need to send the certified mailing. Keep track of all the checks that were reissued or returned by mail to ensure they are not included in the report that you file. When preparing your report, you'll want to provide us with the data like we previously mentioned in the GFO. If the data is received in the correct formatting, it will enable us to put that information into our system in the best way possible, so our claims processing group can find the owners more easily. So you're going to want to provide us with all the details of the owner's names, addresses, social security numbers if you have them, and account details such as the date of the check, the amount of the check, and the check number. At the end of the process, you will submit your completed report to us as well as your remittance, which we will discuss on the next slide. So there's a variety of ways to provide us with your report details, information, and remittance. If you visit our website, you can find ways to submit to us electronically, and there are different methods of doing that. We have an Excel spreadsheet, software you can download from different vendors. You could send us your file using our secure file upload, or you can mail it to us on a CD, DVD, or a USB drive. If you have a small number of accounts, 25 accounts or less, you have these two options as well. There's a paper form on our website you can use, or if you go to the electronic reporting section, we have an online reporting application, which is also limited to 25 accounts. And with this option, it can be filed online as opposed to completing the form and mailing it. In addition to the actual report details, there is a summary sheet called the verification and checklist. This provides the basic information about the organization reporting to us, such as their contact information and the total amount of the report. If you are going to file your report electronically, as opposed to mailing anything to us, you will not need to mail this form separately, as it is a part of the online reporting process. All that information you will be able to include right online. And lastly, you will send us your remittance. For most organizations, it's by check or an ACH payment. However, state agencies have the option of providing us with a journal voucher. The next 3 slides are references. Here you will find our website, the handbook for New York State agencies, electronic reporting, and e-learning. These are the links to the different GFO references we had throughout the presentation. I would like to point out an important GFO in the second bullet. This GFO instructs you to set up a vendor the correct way. On this slide of resources, I'd also like to address bullet number 4. It has the dates for the current year's escheatment, and the operational advisory is issued 1 time per year. It's good guidance for finding out when the different steps are going to happen on the SFS level.
This is the end of our presentation. Thank you for attending our session, and it was a privilege to present to you today. Have a good afternoon, everyone.